Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Landon Swan, the co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you. Good to be here.
All right, so we're talking burritos. Chipotle shares are down about 25% this year, hit an all-time high last September. But like any name in the restaurant industry, Landon, inflationary pressures. Now, Chipotle always says they can offset those costs. All they do is raise prices. It doesn't seem to hurt sales. They continue to have same-store sales above double digits for the most part over the last couple of years, but digital is really starting to pick up for them. What's your take here, and what kind of data are you seeing out of Chipotle ahead of their earnings?
Yeah, I think it's important to note that everybody's raising prices, right? I mean, if they're the lone price raiser out there, they'd get killed, but everybody has to do it. And I think the consumers are just sort of getting used to spending more. I think we saw that with McDonald's earnings today. Same store sales were very strong. I think their revenue was off a little bit because they had to close international restaurants in Russia and Ukraine. But overall, very positive numbers coming out of McDonald's, even with some price hikes. So I don't think it'll be a surprise if Chipotle says that they did better with the higher menu prices. People are just willing to pay it because they really have no other choice. And when it comes to Chipotle, what we're seeing is across all of our metrics, if you look at number of people talking about it, that's mentions, people talking about spending money there, that's purchase intent, or happiness, people saying they like it versus they don't like it, all of that's up year over year, but that growth is actually slowing, which is giving us a little bit of a pause. So if you just kind of hone in on the current quarter that's being reported, everything looks pretty solid, about plus 14% year over year. But if you look at the quarter that's been going on since the end of the fiscal quarter, not the one that's being reported, but the partial, so any guidance they might give, that's actually negative year over year, about 5%. So a little bit of pause there. You can see here with the in-store mentions, this is people saying that they're going into a Chipotle, not ordering online or picking up. Doing well, a little bit of a recovery, but still way down from 2019. So that's a bit of a concern. Even when you look across the total delivery mentions, it's not what you had hoped. I mean, we have a huge spike in 2020 when you had to get basically delivery or pickup, and it just wasn't as sticky, I guess, as you would hope it would be. Not as many people stuck around. And so those numbers are up about 7% year over year. But when you look at the chart, it's flat, big spike in 2020 and then flat again. So we've actually kind of reverted back to 2019 levels on the digital mentions, which I think is disappointing for consumers or for investors, because you would think that would, flood adoption. Everyone would start just using the app if it was a great experience, but that's really not what we saw. We saw it was a use case where out of necessity, and it's not carried over into a use case of demand. So a little bit concerning there. I think that is one of the things that we have to watch for on this earnings report. And then the trends. So it's kind of I guess adding to the disappointment is they've got some trends that are really helping them. When you look at people talking about going back to restaurants, that's plus 28% year over year. Eating fast food, plus 24% year over year. Mexican food, plus 16% year over year. But none of their numbers are really at that level. So they're falling behind the trend. They've got a lot of trends sort of pushing them, but they're not taking advantage to the level that we would hope to see as investors. So overall, I would say that we're leaning a little bit bearish, but mostly neutral. Just a little bit concerned that they're not taking advantage of all the things, all the opportunities that they've had, be it the forced digital usage or all these restaurant trends that people are going back to restaurants. They're just not doing what we would hope they would do. So leaning a little bit more to the bearish side, but again, closer to neutral than anything.
Landon, I'll keep this pretty simple. Good news out of McDonald's today. That stock is up nicely after earnings. That's fast food. This is fast food. Lululemon's kind of Chipotle's kind of the Lululemon of fast food, right? It's a little higher price point, a little better quality than some of these other places. But Landon, they had 38% year-over-year increases last year in sales. This one they're looking about, it says 18.7 is what I read. Are they going to have trouble with comps? Is that going to be enough there? I mean, this company's growing, and they continue to embrace things like digital, like drive-throughs, all the things that should keep them popular, and they're growing. They're still growing quickly, Landon. But is 18% comps versus 38? That's slowing, even with those crazy comps from the pandemic. Is that enough to put this? Because this stock's gotten hit, even though they continue to put out pretty solid numbers, Landon.
Yeah, I mean, the stock was up there, right? It was like 1,900, I think, something like that. Now we're at 1,300. And if you look at the one-year chart, it's just been a slow ride down with a few false hopes here and there. But really, it's just been pretty much a straight decline for a year. Pretty disappointing. And of course, all of those kind of numbers that you're talking about, 18% revenue, that's going to be baked in. That's, street analyst expectations. That's already what's out there. LikeFolio data isn't usually as precise as to call an over-under on something like that. We've got them at plus 14%. So if I had to pick one side, I'd take the under on plus 18. But I don't know that LikeFolio is that good at nailing like a 3 or 4% move. But overall, I think that the message is that there's restaurants out there that are doing well, that are handling this well. McDonald's was one today that we saw. Obviously, it's apples and oranges to a certain extent, like you're talking about. Chipotle, McDonald's, different animals. But with everything backing Chipotle, like all the things that I talked about, going to restaurants, fast food, Mexican food, all those figures are larger than the increase that we've seen in Chipotle. So I think that whatever opportunity is out there, they've not, I wouldn't say they've missed it. They just haven't fully taken advantage of it. We're even seeing, when you look at happiness levels, it's even a little concerning. Chipotle's at 61%, McDonald's is at 63%. So yeah, they're the Lululemon, they're like the premium fast food, but still their happiness level is actually lower than McDonald's. And when you compare them to some others like Shake Shack, for example, at 72, they're really falling behind. So I'm not saying that this company is doing very poorly. I just think that they had a golden opportunity and they've not fully taken advantage of it. And I think that's the main concern that I have. I don't see a huge number coming out of them today. I don't see a huge rally off of this. Long term, if you love this company, if I was going to invest in this company, I would probably wait until after earnings and just see what the shakeup is. I don't think it's going to be a huge drop off, but I don't think there's going to be a lot of opportunity cost in missing this earnings call if you're thinking long term, because I just don't think they're going to blow out to the upside.
Yeah, you wonder if this is a new trend starting for, maybe the growth rate. And Kevin mentioned this, Landon. Comparables are going to be really difficult for this company over the next several quarters. But I was looking at the in-store mentions. It's up 13% year over year, down 25% from 2019. But then I look at your other chart, Landon, and it's got people talking about eating out, year-over-year change on going to a restaurant. It's up 28%, fast food 24%. It's lagging on those type of metrics then, right, according to those two different charts?
Exactly. Yeah. I mean, it's basically this is saying, like, if this is a restaurant, this is fast food, this is Mexican. Chipotle should be somewhere in here, right? Between 16 and 28, because it's got all these things working behind it. If it was up at 30 or 35, we'd be talking about how they're outperforming the trends, but it's at much lower than that. So I think that's the concern. It's lower than all of these at 13. And so it's got all of the momentum it could ask for with all these trends. All of its peers are feeling this and they're doing very well, but Chipotle just isn't capitalizing. So I think that's the concern for investors is, here's a golden opportunity, and they do okay with it. But they're hitting a single when they had a meatball down the middle, should hit a double or triple. So just a little concerning on the opportunity missed here, and I think it's going to come through in the earnings call tonight. Yeah,
but you guys aren't negative; you're just slightly positive, but basically neutral on this, right?
We're negative 17, which, if you're familiar with our earnings scores, usually we get to around 20 or so before we start making trades. So we're not quite there. I would say we're neutral with a bearish lean. Again, in that kind of camp, if I'm a long-term investor, I'm on the sidelines on this report waiting, and I'm not interested in getting in before the report.
Dare to diss Chipotle. I don't think we've ever heard that out of you guys, though, but the trends and the data are reflective of maybe the opinion there. All right. Great stuff as always, Landon. Appreciate it.
All right, take care. Enjoy your lunch.
All right, that's Landon Swan, the co-founder of LikeFolio, breaking down the data on Chipotle. Now, Kevin,